Good afternoon, everybody. Thank you so much for joining us today and welcome to the Real Life Real Estate Investing Show, where we show you how real life, everyday people make generational wealth using real estate. Today, we're going to be looking at some properties that Luis and I are trying to buy because we're trying to build some wealth and some cash flow in real estate. Luisito, you are on mute. Talk to everybody. Let them know.
How you doing, everybody? My name is Luis Alejandro Lopez. I'm a real estate wealth coach with Real Life Trading. And yes, the plan is to buy all the properties today. So the plan is we're going to be underwriting properties in Florida, as you know, which is our regular market. And we're going to be showing you how we look for them. We're going to be looking at properties in auction.com. These properties are considered REOs. They went already into the foreclosure process. None of the investors bought it at the county auction, and they became REO properties. So now the banks are going to, in turn, just go and do another auction and get rid of them because they're not landlords. They just want to get their money back. So they put them in several websites. We've discussed about them before. It's auction.com, Upsa.com, Hot does it as well, and a few other ones. And we're going to concentrate today in auction.com. All right.
Yeah, and so just to clarify for those not familiar, REO basically means real estate owned, and it is a term that is used for most institutions out there. But in specifically what we're referring to right now is real estate owned by lenders, by banks.
By banks.
Bank owned is another way of calling it, as you can see right there on your screen. And I'm loving this new update that Zoom did because it makes it real easy for me to do that. I didn't even know how to do that just before this update. Okay. Can everybody see that circle right there? Does that work? The annotation? Perfect. Give me a couple ones if you guys can see that on the screen. All right. Love it. Perfect. And by the way, team, we're going to go ahead and get started real quick looking at some stuff on auction.com. But we do have a surprise for everyone today. We will be bringing on the one and only, the beast, the man himself, Mr. Kevin Gentry. So stay tuned to hear how this amazing gentleman, who is an engineer by trade, is building generational wealth using real estate. He is, I'm not going to give too much away, but he is doing some really cool stuff, and he is about to expand and blow up in real estate over the next couple of years. You want to hear his message, stay tuned, and you'll see exactly what he's up to, which is a lot. It's really cool. I got a little bit of a preview, so I'm excited to share that with the rest of you guys. He's excited to share, I'm sure. So we're going to be bringing him on probably around either 2:30 or 3 o'clock. Kevin, you let me know when you are ready. And that's 2:30 Eastern, so either in half an hour or in actually, I guess 22 minutes or in 52 minutes. It's up to you.
Right. So let's get the ball rolling over here while Kevin gets ready. So we're going to be looking, this is auction.com. Anybody can sign in. I'm already signed in. You just need an email and a password like anybody else for any other website. And you don't need just to browse, you don't need any additional information. Now, when it's time to go and purchase a property, yes, you will need the names, you will need accounts, you will need to make payments. Hector is going to talk about it in a little bit. But right now, you can look at any other property in any other market just by typing where you want to go. The annotation, that annotation can be deleted.
All right, so sort of the first thing that I like to do when I come to auction.com, because I shop in a lot of different markets here in Florida, I don't tend to limit myself to one particular county. It's super versatile. You could search by city, by county, by whatever you'd like. But I usually just go Florida because we are in several markets in Florida, and it just makes it easy for me to identify the areas where I want to be. I'll either draw a map sometimes, or I'll just zoom into the area where I want to be. Or like I showed you guys a couple of weeks ago, I believe we did it. I just go right down the list and start liking everything and put it in my favorite, everything that's in a market that I like to participate in. It does two things. It, number one, alerts me that every time that, that's your circle, buddy. It alerts me every time that something happens with that property. And it also alerts me when there is other items, other properties in that market that come up.
All right. So the markets that we're working right now, we're doing the I-4, basically the I-4 corridor and south. As you see, Florida, the I-4 corridor comes from Tampa all the way to Daytona Beach. Okay. So we're doing the corridor of I-4 and south of that. Now, we are used to do, and we've been done for years, whether for Lauderdale, Miami, West Palm Beach area, those properties, that market has become unpurchasable. So we moved, same thing we told you every time, if there's not a market there, there's always going to be a good market. And we moved to a secondary and tertiary markets, and we've been doing really well in this area. Basically, the Clearwater, St. Pete, Sarasota, Port Charlotte, Fort Myers. There's a lot of growth, and if you saw the show for the last 2 or 3 months, every time we come in the mic, we tell you Florida's exploding. And the areas that are exploding in Florida are precisely down here, okay? Basically from Spring Hill and south to Cape Coral. Furthermore, yes, Marta is correct, Florida. And furthermore, since we had Hurricane Ian basically came over this way, where you see Port Charlotte was the center of the storm, it destroyed all this area. There's lots of opportunities down there. Actually, we just got one wholesaler sent us a property 20 minutes ago. It's literally in the same street that where we have one, our flip that got flipped, that is going to be pretty much ready in 2 weeks, pretty much, once we finish with the roof repairs. So let's look into those. Let's look into what are we doing here. You'll see that if you keep moving the site, it's your search area is going to update for the properties that are in the same neighborhood. And since we were looking earlier, there's one. Let's start with this one that I really, really like.
Hey, before you get that seems like a lot of inventory.
Crazy.
Make sure that you have the asset class as bank owned, because if not, you're gonna get a lot of other stuff. Yeah,
yeah, got it.
You can do short sales too, because those short sales through auction.com are pretty efficient.
I wanted to come into, it's not there. So it was a short sale. I want to.
Right there on the asset type, it'll show you. It gives you the ability to choose both. Yeah, the only one we don't want is foreclosure, because you do those elsewhere.
Because I will take them at the auction.
Yeah, perfect.
All right. No, it's not there. All right, so we are in Port Charlotte. We're basically bidding in this area. We're buying in this area. We're buying also in St. Pete. So where you want to start? Start from north to south?
Yes, but before you go, I would just use the list, bro. It's gonna be much easier. Zoom out a little bit on the map, get the entire area that we work on the map, and then just go down the list and put everything in your favorites that is in a city that we like. So I will answer Matt's question while you do that. Matt asked, why bank owned? Well, so bank owned, as I mentioned to you guys in the past, banks are not in the business of owning real estate. They want to hold your notes, your loans, and that is an asset. The second they get your properties back, or anybody's properties back, it becomes a liability for them. So automatically they are a motivated seller. They're not in the business of owning real estate. And we are in the business of solving people's problems, right? So we want to solve the bank's problem. We want a value-add project, and we want to add value to the bank's life by taking it off their hands at a discount, of course. So bank-owned properties are a great source of, they're a distressed seller, essentially. They are a great source of distressed property. Does that make sense, Matt? Do you need more than that? Does anybody need more than that? Does everybody understand why we target bank-owned properties? And now we will do short sales too. Short sales can tend to take a little bit longer because you have to get bank approval. And a short sale, for everyone who's not familiar, is essentially where the seller owes more than the property is worth. And so the bank works with the seller and agrees to sell it short of the balance on that loan. That's why it's called a short sale. The seller has to be in a very particular financial situation for the bank to agree to that. There has to be some sort of distress, and the property, again, has to be worth less than they owe. There's not a ton of short sales out there in the market right now because of such a massive run up that we've had in the market over the last 2 years, and so many properties went up 10, 20, 30%, that it's hard for people to not have equity in their homes right now, even if they are facing foreclosure. Unless you've bought in the last few months and you're in one of those markets where prices have gone down significantly, you're not really doing a short sale. You're just either selling flat or making a small profit, even if you do get in trouble. Always get a discount, Matt. Always get it. Matt says, so get a discount when you buy those bank-owned properties. I say get a discount when you buy all properties, even your own home.
Yes.
I bought my house, the one where I'm currently living at a major discount with a whole lot of repair to do to it. But, you know, that's because I enjoy that.
All right, let's see. Auction starts. I like this. All right, 1051 Meadowlark Terrace in Davie, Florida. This is a stone throw away from my buddy here. Basically, 10-minute drive.
I could walk.
Let's have a look at what we have here. Oh,
I said I could walk there.
opening bid is 220. Yeah, you can walk pretty much. So let's have a look. As we discussed in the past, we are okay. Matt is asking in terms of percent of what kind of discount you get. At least for less than 30%, it's not worth it. Okay, remember when you buy in here, you add in value, so you need to have the spread in order to add the value and take, have enough for profits. So if the discount is not 30% or so from the ARV, from the actual comparable value once it's repaired, after repair value, it's not worth it. Now, you're going to see that some people, for example, if you see on Slack, I posted and we can see it very quick here. Little side turn. We had a property that we inspected, and I'm going to post the inspection video in Slack. Yeah. Emily went and inspected. Yes, 340. I was just taking snapshots of the screen, and the thing was just jumping and jumping and jumping and jumping. This property is 410 to 415. However, yep, there's Emily right there. When did I tell you? What's what, to 320 something when we spoke? We spoke about 1 p.m.
Yeah.
Quarter to 1. The auction supposedly stopped at 1 p.m. It kept going up to 340, 200. This is a 410, pretty much the house. Now, for you to go buy, repair, and flip, you need to leave some space for you to have your closing costs and all your expenses at the time of closing. This house, some investors just buy them to do the bare minimum and then rent them out. So
what was the ARV on this one, Lou?
415, 410, 415 tops. Okay, and it's a beautiful house, beautiful neighborhood with a beautiful pool. However, when we did the inspection, there's a couple of cracks going into the pool, so the pool is leaking, and the whole the whole finish of the pool is really damaged. Okay, there's some stains that you need to see here. The whole diamond bright needs to be redone. Okay, so that right there is $5,000. Plus, you see these cracks? The cracks were going into the pool. So the bank on this one, they did a few repairs. They put a brand new AC, brand new water heater, and they did a few things. But for example, the bathrooms are all big mess, and there was no water in the house. There's no water utility. So they came, they fixed the pool, they filled it up, and they let it run. Okay, so investors can come and see the pool is in perfect condition. If you know what you're doing, you'll see that the pool is really not. So we took video, and you got the coping was damaged on the side, and there was a whole bunch of damages in. Probably the pool was green for a long time, and the algae eats to the finish.
Yeah.
Let's see what else. We have kitchen cabinets. It's an okay kitchen, nothing to write home about. It's perfect for a rental, but if you want to flip and you want to make the most of your profit, you need to redo this kitchen. So that right there is what, 10, 12 grand. Between you do cabinets, you do nice quartz, you do backsplashes, all kinds of things. Okay. That's the kitchen right there. Cabinet, Marty's asking, cabinet refacing or replacement? In my experience, it's better to replace because by the time that you do a refacing, you're gonna be spending pretty much the same, and they're still gonna be old cabinets. So people like the smell of new.
Yeah.
It's been my experience. A few times I've done refacing, but it's not cost effective. I'd rather put new ones and sell it with a new kitchen. Okay.
I haven't refaced the kitchen since I made good connections for new kitchen cabinets that didn't cost that much. And I stopped refacing them. It just didn't make financial sense. So like these are wood cabinets. So, you know, for some people, right, if you're handy and you're a handy flipper and you're going to come in here, sand and paint these yourself, by all means, you're going to save a ton of money. But for us that we're not doing the work, by the time we pay somebody the labor, the amount of work that it goes into, you have to take these things off. You have to sand all the doors off and all the drawers. You have to sand it. You have to prep it. You have to paint it, give it a nice modern color. Then you have to add new hardware and reinstall the doors back with nice soft close hinges so that, you know, it meets today's standards. By the time you do all that, you maybe saved 15, 20% if you're lucky. And for us, it's still the old kitchen. So the buyer's still going to see it as it's not a brand new kitchen. And then you get into this door is messed up and you got it. By the time it's all said and done, you wind up, you know, really saving maybe 15% at least with current kitchen prices that we're getting, which we have relatively good access to factories that we get direct prices from kitchens. It just doesn't really make sense, honestly.
Okay, so same thing with flooring. We have new flooring here. There was some water damage on, I don't think we can see it from here, but there was some water damage in this corner. At some point, probably it rained and it leaked. So this floor needs to be replaced immediately. And then if we take a look, the rest of the house has this gorgeous purple carpet. So the whole flooring needs to be redone. Now, if you are going to rent it, you can rent it with this flooring here and put the cheapest carpet that you can find. However, for a flip, we need to do really nice, reasonable, and beautiful flooring. And that right there, we run on numbers, is about $7,000 because this is a very big house. It's 4 bedrooms and 3 bathrooms. So again, the standard is not the same when you're going to rent or when you're going to flip. This is a perfect rental, but if I try to sell a house with a mirror like this, people are just going to walk in, they're going to turn their nose up, and they're going to walk out. Or they're going to ask for huge discounts. Okay. Same here. Got a washer that is kind of all broken, dryer that is kind of all broken. So it needs some love. It needs some work. It has really good bones. But by the time that you spend $7,000 in flooring, you spend $10,000 in the kitchen, you spend, what else? $5,000 in the pool. You are what, a 370 to sell a 415. So then you have to pay commission 6%. So you're paying what, 15 grand in commissions. Contractors got a lot of money, realtors got a lot of money, the buyers got a beautiful house, and you did nothing. So it's not worth doing it.
Now, I will answer Matt R's question slightly differently, right? So Matt asked, what sort of a discount should you be looking for when you're buying these properties, particularly when they are bank owned? That's going to vary on your exit strategy, Matt, and what your goal is. If I was going to live in this house in the current state that it's in, that's not a total horrible deal. You got a 20% discount. You're right there. Like maybe I would have liked to get it maybe like a 320-ish, 330-ish, because that way I could do the rehab that I was going to do and still have a nice maybe 10% equity in it. But nevertheless, that's not a terrible price, especially if you're a handy person and you're going to come in here and maybe spend 10 grand in materials and do everything yourself. That's a really, really good price. You're already 20% below market value, and you did the house, and so it does really depend on your exit strategy. If you were going to do a BRRRR, which you're going to have to get the details from that in Vegas from Mr. REI Brian, the real estate investor himself. He will be doing a BRRRR strategy class in Vegas, and essentially he says you have to have a 30% equity after all your expenses, or it doesn't work for his strategy. So it really just depends.
Okay.
Matt says he saw a 2-1, 1,200 square feet in Anaheim for $750K. Sounds like a bargain, bro.
Yeah, you got to remember in California, the only thing you can get with $150,000 that has doors is cars. You cannot buy any property there at all. Not even, not even a trailer, probably. So Mark is asking also, association dues is 115 quarterly. Yes. Why? There's something that we're gonna be talking some other time. It's homeowners associations. Usually, when it's a single family home, they cover the common areas, and if there's a community pool or something like that, that's it. So you're paying. There might be a security guard, gate, few other things. When the homeowners association, when you're in a townhouse or you're in a condo unit, the homeowners association is responsible for the building. So let's say you have a townhouse with 6 different units. That's considered a whole building with 6 units. The homeowners association is usually responsible for the exterior maintenance of that building. They're responsible for all the common areas, for mowing the grass, for painting the exterior, and especially in Florida, they're responsible for the insurance. So that's why when you see here it's 115 quarterly on a single family home, a townhouse is probably $400. Okay, because again, the insurance is covered over there, so you don't have to worry about that. If you want to have your home, you can have just contents insurance and liability, and that's it. Okay. Any other questions? You're muted, bro. You are muted. Okay, so he's muted and he's talking over there.
Oh.
There you go.
Sorry, I didn't see that. So nobody heard me for a change. That is
That's fine. That's fine.
very not common for me. All right. I was saying, Matt asked, so 30% minus plus expenses in discount when you are trying to do a BRRRR. And yes, that is essentially the idea, Matt. The idea is that by the time you include all your expenses, rehab, closing costs, and everything, you have 30% equity, because then you're going to go out and refinance to get all your cash back. And most lenders these days are doing about a 70% loan to value. So if you are able to do that, it means you leave $0 in that deal and you get to move on and take advantage of that cash flow. And that's essentially the strategy behind the BRRRR, but I don't want to give too much away. I'm going to let my boy Brian.
And my boy Brian, let him kill it with that one. No, don't worry. My saying sorry.
All good, man. It's what we're here for.
Ask questions. We're here.
All right, Lou. We were gonna look at the pretty one in Davie because I'm about to head over there and go look at it.
Yeah. All right. Good. So here it is. 1051 Meadowood Terrace in Fort Lauderdale. According to Zillow, the house is worth $415. Okay. So let's look at the conditions. Nice house, canal, view, and we have no more information. So let's copy that address and let's look in a couple other websites to see what we can find. If we cannot find anything of the interior conditions, hey, Terrence is gonna go there? Come on, man. It's gonna take the time that we're in the mic.
Terrence, coming from there, man. Video call. We can do an inspection over the video call.
We do not have any interior pictures here either.
That's okay. We could most certainly look at the exterior, and from that we could get a really good glimpse at what the interior probably looks like.
Okay. Let's see. Let's do one quick other thing here.
I like the area.
Now, this is the MLS. Yeah, I love that area. This is the MLS. You need to be a real estate agent, have a real estate license, or have a really good broker that lets you use the contact. In my case, I paid to be an assistant of our broker. So I have access as long as I don't know it's not here.
Oh, no,
as long as I going to come up on Stellar. I cannot negotiate and I cannot contact the public, but I do have the access to come and do comps and do that information. Nope. It's not on the MLS either. So let's go do. Oh, that's strange. Meadow would could be the correct address. Meadow Meadowood. Probably why. Oh, there it is. Different spelling.
Yeah, you're not gonna find it on Stellar, I don't think.
No, no, it's not. Okay, and there's no information here either. So let's go look at comps. All right, so what I usually do, since this is subdivision, it's completely suburban, I really don't care about the lot size. You care about the lot size more when it's farm areas, things like that. Let's see. In this case, let's ignore the living area again, because we're gonna be looking into this subdivision. Pretty much there shouldn't be that much of a difference between one or the other. And since the market is slowing down, I want to try to get as many comparable units as I can, and then I start discarding.
And
Okay,
one thing we
let's
have started to do is shortening up the time that we're looking back on comp. So we normally would look back 6 months. Right now we're looking at 3 months, but really we pay the most attention to anything over the last 30 days. If we can find any, if not, we'll go to 60 days. But we definitely don't care anything that happened 6 months ago. It's irrelevant at this point.
All right, so we have this property. So 1-story property, 14,000 square feet and roofs, 12,000 square feet living area. That's the living area, which is under air conditioning, meaning it does not include the garage or an enclosed patio or anything like that. We have 3 comps there. One very, very, very high compared to the other 2. And these ones are fairly recent, except for this 490. So, you want to look at a property that I was looking at? Sure. We can have a look at it in a minute. Let me finish this one. Hector, Matt is asking if we want to see that property in
absolutely. We will bring it up as soon as we get done.
So let's see.
For sure.
We have 3 properties. Yeah, we have 3 properties. The most recent one is this one. Let's have a look to see if we can find any information. How did it close and what the condition was it? Nope, doesn't have MLS access. Savannah Place, Benjamin. This was indeed
the reason why you don't have interior pictures, Luis, is because it is occupied. I just noticed that on auction.com.
I can imagine, yeah. Now, let's look at this very quick. This property was purchased by someone, by Premium Solutions, whatever, $250 in December 2021. Premium Solutions then went and sold it to Savannah Place at $320. Savannah Place did some repairs and they bought it in January and they sold it in November for easy 120 grand more, 120 something. So this is a beautiful flip. Let's have a look at that. So
wholesaler did pretty good too,
same
man.
Thing. That was an amazing flip. Let's see what we can do. Now, let's try to find out the conditions of that house. Total new flip. Okay, so they didn't do much on the interior. Brand new kitchen, brand new appliances. This is a total flip because they don't even have hardware on them. Okay, they're doing the same gray and white that everybody else is doing. Brand new flooring. Brand new flooring, brand new appliances, brand new bathrooms. Is this tile or this is the stick-on?
No, it looks like it's tile because if you notice, they did a little roll right over the vanity too. They did a little roll subway, which I don't know why you would do one single roll, but I wasn't their designer.
Okay. Exactly. That's okay.
So, I mean, it's a very standard, totally remodeled house. The nice thing about finding a flip team when you guys are looking at comps is that you get an idea.
This might be your target.
This is your target, exactly. And now you know it's like, this is what I should be upgrading, the quality that I should be doing, because this is what sold. It sold relatively quick once it got rehabbed. And they set the comp, they set the market. Basically, your appraiser is going to come in when you go to sell the property after you're done rehabbing it. An appraiser is going to come in. They're going to do exactly what Luis is doing. They're going to look at this comp and be like, okay, it's comparable. Boom, boom. This is about what it's worth.
And you see, it took a while too. They bought it in January. They listed in June for 485. Market wasn't there. Everybody was crying. Everybody was worried. They lowered the price a month later. They removed it, and I guess they gave it to another agent for another 50,000 more. And then once they got into contract, it closed for a little bit higher. So they did the strategy that I like. They lower, and then you create a big boom, then pick up your offer, and usually for more than what is rented. They were going for 485, and definitely there was no way to get that 485 because let's see, the last one that closed, probably they were probably trying to get this 490. Let's have the condition this 490. This 490 has water view, which the other one
490 is
doesn't
on the
have.
water, yeah.
So water right there in Florida is at least 20 grand, 15 to 20. One story.
It's nice.
Yep. No upgrades though. Old kitchen. This is kitchen from the 80s.
Oof.
Original kitchen. Yep. So
That's
yeah,
crazy
that
how
means
much
the
that
other people
shifted.
got affected by the market.
That's
The market
crazy
did
how
to the
quickly that
value.
shifted. If you want to go back to IMAP, so we could see the difference in the time in between those
Yep.
those couple of months, how much the buyer's appetite in that area changed, because this is it's not even upgraded. Unless you
Nope,
really,
still
really
upgraded.
want the waterfront.
It is smaller than the comp that was rehabbed. He had water, and he sold for 40,000 more in a matter of 3 months. Wow. Wow.
Yeah, and realistically speaking, the only difference that it has is the waterfront.
The water.
They both have a garage. They neither one of them has a pool.
Let's look at the third one. Let's look at
So
the
that's
third
the
one.
story that history comes tell you, team. And so right now, if Luis and I were going to buy this property, we would not assign the same value as
Of
this one that
course.
we're seeing. We wouldn't assign the 450 value. We see it's downtrending. So
chance.
we would drop that at least another 10%, Lou. I'd probably be like, hey, let's say 420.
I will be
most.
425 for
Yeah.
425.
And that's like
420.
high end. Really, I would target like 400, and we know
Yeah,
that
completely done.
Yeah.
Completely done. So let me close this so we don't have that many screens open. Okay, so this is the one that was completely rehabbed. This is the map. Okay, so this is the third one. This is the one.
this is the middle
the same. This is the same. This is the same. So it's this. Booyah.
Oh, that's cute.
They
That's
painted outside. Brand new kitchen.
I don't like the color.
Guys, Dan, new stop in Tesla. New stop in Tesla, 121.22. 121.22. Let me put it here on the chat, just in case. That's the Tesla, DJ's Tesla trade. Okay.
I don't love the color on the kitchen, as I was saying. We were just having this conversation.
It's one of those modern things, whatever. It's a matter of look. And did you see they're doing the same thing we discussed the other day? Look at the frames.
Mm-hmm.
So now it seems to be the thing. Now all the doors and everything's in dark instead of white. But this is completely done. Look at the flooring. Look at the kitchen. Hurricane windows. So all the windows are done. Bathroom is done. Flooring. That's pretty. Used to look at my bathroom in Florida too.
I'm pretty sure that's an IKEA
Yeah.
kitchen now that I see the bathroom cabinets.
Probably. Lucian is asking, what are hurricane windows rated as to now?
I'm relatively sure it's 140 mile an
100
hour, if I'm not mistaken.
Yeah.
I don't know if that'll change with
Yeah.
Hurricane Ian.
Yeah, because they're changing a whole bunch of things. All right, so 590. This house is completely redone. It's probably even better than what we would do because we usually won't go into the hassle of replacing all the windows. So this is definitely way, 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 way up there. Okay, for 570. So honestly, I will say that that property is worth about 420-ish, 425, and go from there. Okay, let's go back.
I like it. I would
Let's go
tend
back.
to agree with you. We could do let's go on the low side, 420. Just why not?
Yeah, 420.
Elon likes that number too.
So this is our spreadsheet. This is how we do it. We go and we have an inspection. We create. Let me just move these things down out of the way. I need to review this once. And
we're
we're
getting an
gonna
upgraded
assign
one pretty
prices
soon.
to all the things that we think we might need to get done. Okay, and we'll go from there. That will create a budget. Okay, so listing price on this one, it's not on the MLS, correct?
No. Oh, I'm sorry. It is on the MLS. I found it. 484 is the LP.
484.
Geesh, bro. There's
Okay,
not even a
could you-
point
if
in
it's-
underwriting this, bro. What's the point?
What?
What are we gonna underwrite? We know we're not even gonna be close.
Let's make. But you found it on the MLS?
Yeah, it's 484,
We have it here.
900 on the MLS. All right, team. So quick time saving tip. We're gonna do this one for fun to show you guys the process, but normally we would just walk away. The bank is listing this thing on the MLS right now for 484, and it's current as is condition. And now we always get discounts on what they list for, but that is a major discount that we're gonna require in order to make this one work. When our exit is
40%.
way below their ask.
Yeah.
If they were asking somewhere like around 400, 3 something, then I would be like, okay, there's a chance. But they are so high below where we think this property is worth, and it's understandable, you know. But they gotta realize what's going on, and that's what's going to happen. You know, there's a lot of price discovery still happening and still going on.
I mean, here, estimate for them is 450. I wasn't paying attention to that. So we are even higher than what Zillow thinks.
Is Zillow's model starting to come down a little bit and make sense? Oh my god!
No.
I guess
Right,
after they burned all that money, they realized they gotta check the algorithm.
I'm gonna keep my mouth shut. All right, so we have exterior. If we want to sell it the same way as the other ones are, the roof, we will need to check the condition of the roof. But as of now, doesn't seem to have any leaks, doesn't seem to have any major problems. Most of the times, whenever we walk into a house and we just walk in, we always find some kind of soffit, some kind of wood rod that needs to be replaced or repaired. Okay, so we usually spend about $1,500 just in repairing sides of the roof, soffits, and things like that. Next thing that we're going to spend, wood destroying organisms. Usually in these houses in Florida, they are made out of concrete. They're in a good neighborhoods. They're fairly new. There's no termite issues in this area. Now, if we're looking towards the east, towards the beach, then yes, we will add, especially if we were frame homes, we will add to tent the whole house just to make sure that we don't have any damages. This one, we're not going to add any value for. We're not going to do it. We're not going to put a tent on it. Okay.
And then another thing that we normally do, Lou, just to share with the team, in cases like this, when we are unsure, we're gonna go and look at the building department for that city and look at the permit history, particularly for the roof and any major things like electrical items and things like that. This roof on the one side looks pretty discolored, but that's the side where the sun hits it. The other side doesn't look that bad. Yeah, so the roof really might not be that old, but I'm gonna want to check the history and the permits.
Probably it might be the original too.
Yeah, here in Florida, roofs are a big problem or a big thing. Their insurances, especially now with the hurricane, insurance does not want to insure roofs that are over their life expectancy, and that varies by area. But here in Florida, if it's a flat roof, it's 15 years the life expectancy that insurance companies assign to it. If it's a pitched roof like this one, a shingle roof, they're going to go 20 years on that. And if you're somewhere around the 18-year mark, your best bet if you're going to flip it is to go ahead and replace it so that your buyer doesn't come back at you with, hey, I can't get insurance, or I got insurance, but it's going to disappear in 2 years. And, you have that pushback. And so we really always take a really close look at that on the back end. We might go kind of quick the first pass at this estimate, but before we actually commit capital, we're going to double check the building history.
Mm-hmm. Yeah. All right.
Yes, a ton of mildew. Cindy says a ton.
There's a ton of mildew. Yes, and we plan for that. We usually, when we do it, we paint inside and we paint outside as well. So soffit repairs or anything, I put it here. So this one is going to be 0. This is soffits and things. I put it on roof. So it's either one or the other. Windows, are we going to replace windows? No, we're not going to go through the aggravation of replacing all the windows and slide doors, things like that. However, we do repair all the windows that need to be repaired. So usually the balancing, the locks, all those things, they might break here and there. So we usually add about $500 on repair of the windows. Exterior repairs on this one, I don't see any major damages on the stucco. However, I do see that the fence, it's all messed up. So I would at least budget for, yeah, it looks okay. The screen doesn't look bad. Let me go back.
I mean, there's the stains right here on the side of the house that there might be.
And that's okay because we usually gonna pressure wash and paint. We're gonna pressure wash and paint. So those stains are gonna go away. What I'm trying to see if it's anything, any major, any screens broken. But if from here it looks fairly decent. We probably have to replace a few slats and repaint. You see the fence here? You see this little post here? It's falling down. So we probably need to redo the post, redo the pickets, and fix it. So that's probably what, $2,000, $2,500 roughly.
I would say because we don't have eyeballs on it, I would go 3. Because that little mildew on the side might have damaged a little bit of the stucco, so just in case. And then once I drive by it, I can confirm that.
Okay. Landscaping. This one looks super basic. Okay. If you saw the comp, there was really not much landscaping that they did. Okay. And if you see the really, really pretty one, there's also really no landscaping that they did. So on this one, we'll just, do the base. We need to trim, mow the lawn, and clean it up basically. And there's really not much to do here. So I will put $700. If we usually try to go around 1,000, I don't think in this one we need that much.
Yeah, I think we could get that done with 750.
Yeah, because it's really nothing. I mean, if
Wesley's got a question, Louis.
What?
Wesley says, is property insurance really high in Florida? It is ridiculous, man.
It's stupidly high.
I'm actually hoping to get an insurance agent on with us in the next couple of weeks. My agent has agreed to come on. We just got to figure out schedule, and we're gonna dig into that. There's some stuff that they're trying to work to lower the prices with legislation and this and that, but it has gotten very expensive over the last couple of years.
Broski, quick thing. I'm gonna add up the more. You see the palm trees? You see the palm trees touching the roof? We will have to trim those things. And we have to trim this one as well.
I see that. So all right. So you want to go 15 on the landscape?
Yeah, 15. Mm-hmm. Okay. Now, next thing. Yes, Emily's saying, and you need roof less than 15 years old to be insured. That is correct. Supposedly the break line, it's the full life expectancy of a roof is 20, but when it's coming around 18 or something, all the insurances start smelling bad, and they try to look the other way, and they try to put excuses that they don't want to insure it. So it's really hard for buyers to get insurance, and usually ends up going into Citizens. Citizens insurance is the state's insurance, which has its pros and cons. That's the one insurance that you get when you cannot get anything else. And it's usually, I would say a little bit more expensive than usual, but they will insure. But again, then your budget balloons up because your roof is bad. So you have to pay more in terms of insurance, and you need to start saving money because you need to do the roof in a couple of years. It's not worth it.
Lucian, yeah,
Okay,
metal roofs
so-
are definitely helping out a lot here in Florida. They're becoming more and more popular and a lot more affordable, man. They've come down in price significantly. All right, Luke,
Mhm.
let's it's
Metal roofs, I
2:50 though,
said.
so let's go ahead and wrap up this one. We got 10 minutes to wrap her up.
10 minutes? Okay, let's do it quick. Now, the other thing, we're talking about metal roof, for example. In this one, you cannot do a metal roof. You probably cannot. This type of subdivisions in Florida are controlled by homeowners association. Homeowners association will control what type of roof can you put in, what type of paint, what color of paint you need to do. So they might not even let you to use a metal roof. Now, the other thing is, for example, do you see this house next door across the street? It has S-tile. If he wants to do the roof, most likely the association will not let them downgrade to shingle. You can always upgrade, but you cannot downgrade. A shingle roof, it's this size, 1,200 square feet, that's probably what, 15 grand, 14 grand or price? Probably a little bit less.
Yeah, maybe 18 at the most.
A S-tile roof, we're talking about the 30s. Okay, because the material is way more expensive. Okay, labor is pretty much the same, but the material, you cannot reuse it, and it's pretty much double the price. All right, so let's do paint inside and out. We're gonna paint the whole house inside and out. For our estimates of what we've been done lately, it's about $3,000 in, $3,000 out, labor and materials. Paint, just like everything else, went up the roof in this past few months. Okay, since we don't know what we have, and the last comp has a new kitchen, we need to budget for a new kitchen. No ifs or buts or about it. Okay, so we don't know the size, but if we go by the same model that we had on the other one, okay, it's an L-shaped kitchen that doesn't really have that much to it. We're probably gonna go fairly the same. Okay, we might have spruce up for a nicer backsplash and put hardware and things like that.
Yeah.
But a kitchen like that with appliances and everything, our price is about 12. Okay, it's a nice kitchen. Now,
and everything,
bathrooms.
If everything seems a little low for you guys, team, we get pretty good pricing. We've been doing this for a while.
Yeah,
you will eventually build a nice Rolodex of people that can give you these prices, except for you, Matt, because you're in California. I'm sorry, bro.
Okay, bathrooms. We remodel a full bathroom for about $3,000 labor and material, $2,500 to $3,000. So let's add it up. Okay, we need to do them. The comps have them. There's no way around it. AC. We don't know the age of the AC. A brand new AC unit is about $4,500 labor and install and permit on the whole thing. We usually don't, if we don't need to. We service whatever unit is there. If of course, if it's serviceable. So we're gonna just value for the service. Full service. They're gonna come. They're gonna clean the interior. They're gonna clean the coils. They're gonna redo everything. They're gonna fill up the gas and make sure the unit is working in good condition. We're probably gonna put a nice fancy thermostat in it and call it a day. If the unit is not serviceable or we need to replace it immediately, then we'll have to budget for that one. But usually we tack up on top of the price. So we sell in house with a brand new AC, which in Florida is like the best thing you can do. Okay. All right. What?
The water heater. We're just gonna budget to replace it because we can't see it.
Water heater. We just replace what is there for what is there. We don't go in the craziness of putting tankless water heaters. Usually tankless water heaters, you need to bring special electric service into the water heater because you need a bigger breaker, you need thicker wires and a few things. If we're just gonna flip it, it's not worth it. If it's your home and you're gonna be living there and you want to save on electric, it's totally worth it. Not for us. Drywall repair. We don't know. We have no idea. Let's put a couple of grand just in case they decide to bang the door, run the walls, and bang everything. Again, this is a foreclosure.
Yeah, I would just put $2K just in case. They might, since we don't see it, we have to budget extra, team. So we buy property sight unseen all the time. And we just take precautions by budgeting for everything that we don't see. Flooring, we don't know what the floor looks like. So we're gonna budget to refloor the entire house.
To hold the floor, yeah. And we said this one is a 1,200 square foot home, $4 a square foot. Ouch. I hate spending money on those floors. 4,800.
Cindy
Well, we need
asked,
to
is
budget.
everything mostly electric there? If you're referring to the water heater and the AC
It is.
furnace, for the most part, yes, Cindy. There's a few areas here in South Florida that have propane gas or natural gas, I'm sorry, not propane, for their water heaters and their stoves. And that would definitely mean that we're a little bit under budget at this price, but it's not anything that our contingency budget can handle.
Mhm.
So we typically are going to
Baseboards,
budget
if
for
we're gonna
electrical unless we see it.
Yeah. Yeah, pretty much down there, everything is electric. Baseboards, if we're gonna do the flooring, we're gonna do all the baseboards. We usually budget at least $1,000 for doing the baseboards. You have to do them one way or the other. You keep the ones that you put a little quarter round, which they look awful, or you just go and do the expense and put the big fancy ones, the big tall ones, and go from there. If I'm spending that amount of money on doing a floor, trust me, I'm putting the nice baseboards, because if not, it's gonna look ghetto. All right. Fixtures. It's all the lights, electrical fixtures, lamps inside, lamps outside. Again, since we're flipping the house, we don't go crazy putting, major candelabra or things like that, candelabra, things like that. We go contractor grade, so $500 at the tops. Cindy K asks, floor that you figure, vinyl plank? Yes, we use water resistant flooring. No, waterproof, which are even more expensive, we do water resistant. Water resistant is the one that can be wet for a while and then it mops, and the waterproof is the one that can be wet for the rest of time. The house will crumble and the floor will still be there. We go for water resistant, and with labor and material, we're talking about $4, $3.90 something, somewhere around there.
Or we go tile.
Okay.
I know I love
we go
ceramic,
tile,
I
yeah.
love porcelain tile, but the vinyl planking is starting to be very popular. Buyers are loving it quite a bit.
Mhm. Blinds. I don't want to spend money in blinds. My bud here loves to spend money in blinds because he doesn't want anybody peeking through the house. So $300 in blinds for all the windows that frame the house. Electrical panel and electrical repairs. In this one, we probably don't have anything. This is a fairly new home. If we look into it, it's probably 1980s, 1990s. Yeah, 1989. Okay, so we don't have any cloth wiring. We don't have any old style breakers. We don't have all kind of weird things that we see in older homes. And we usually have to budget. That's another issue. If they have old electrical breaker panels, they cannot be insured. So it's another, cost that you have to take. You have to replace it. And usually, if you sell a house with a new electric panel, the buyers couldn't care less. So in this one, when it's not budget anything for electrical, it's really, it is what it is.
I would do the for the outlets. I would do the $500.
Yeah, well, we put so $300 in outlets. I usually put that in the interior, part of the paint or whatever, or fixtures. We usually replace all the outlets, and we replace the light switches for the big Decora fancy ones that look pretty, and they're nicer than the old style switches.
Easy cosmetic repair, cheap. No pool, no liens.
Yeah. No pool, no liens. If we buy it out there, we buy it clean, so there's no association liens or property taxes. We should get everything the right way. So if we copy here, copy and paste, that will tell us that our full amount of repairs is 41 grand. And then we have a contingency of 10%. The 10% is in case we screw up something, we have a little balance of money there to cover mistakes. Plus, besides covering mistakes or covering things that we unknowns, if we only spend the 41, we have a little budget that we can come down as well in the moment of selling it. So we go back to auction.com. We were talking that we are in, I guess I didn't put it there. So let's do it.
You could do equals and then bring it all over.
Yeah. Let's copy paste this something. Okay, so auction.com to pound. Done. You see, that's why I don't like doing that.
Hey, so we got a couple more minutes before we bring on Kevin. Kevin, we'll bring you on in exactly 3 minutes when Lewis is done with this underwriting. If you want, I can paste it over. Lou, you want me to do it?
Yep.
All
Go
right.
for it. Go
So
for it.
I just got a question. Yes, the answer is yes. Right, we want a survey. Yes,
Which
we
one?
want a survey.
Yes,
Okay,
we
it
want a
is
survey.
there for you, sir, in the auction tab.
All right. So we have the ARV for the house. We're talking about some 425. We copied the repair. No, let's copy the repair.
I got you.
So
I'm doing it. I'm doing it.
You got it?
Yep.
Okay, so here's where we at. We're talking about this line. So let's make it a fancy little color here so everybody can see it easy. This is the address. The ARV is 425. Okay. Now the repairs that we're doing is 45 and change. The cost. What does this cost? Is the cost is going to cost us to sell the house after all. What's this cost include? That includes commissions to real estate agents. That includes stamps on the deed, which is the sales, kind of the sales tax for properties. That includes title searches, lien searches, includes the title company fees, includes every FedEx fee that they do, and all kinds of things are included here. Okay. Our profit, we calculate with this one at a 12%. It's low. However, with 12% profit, it's literally my boy here can throw a stone at the house and he can go there, lunch, breakfast, and their breakfast, lunch, and dinner. It's very close. It's a fancy, fairly fancy neighborhood. I mean, I'm going to say upper middle class. It's probably very looked after, good schools in the west side of town. I would just do 13 just for being a little on the safe side.
I would be a 15, bro.
You want to do 15? We're never going to get it.
Well, that's because we're back in this market, team.
Yeah.
Yeah.
Oh, wait, we're not paying interest on this one, though. Let's say, do you want to calculate interest? No.
No,
really.
You could literally can these two fields moving forward, by the way.
Yeah.
We will not need those anymore. Cash money.
All right. So that's what it does. Now, auction.com has what is called a buyer's premium, meaning that when you buy the property, you still have to pay on top of it. Okay. So what the formula is telling us is that the maximum bid that we can use in that house is 285. If we bid 285, we're gonna end up coming. Actually, we're writing a check for 300 grand and a few bucks. Okay. So when Hector was saying earlier that if they're asking 489, they're really 484. They're really not gonna look at our $300, but $300,000 bid.
Yeah, it's gonna be really tough to bring them down 200.
So it's at that point when it's so high, we just let it sit. Somebody might buy it. Most likely, nobody will bid all the way up there, and it gets canceled. And it comes again, and it comes again, and it comes again. And every time it comes, they lower the price, they lower the price, they lower the price. Actually, this one is fairly new because if I see correctly here, they even still have the owners. You see?
Yeah.
They haven't even have recorded the title change, meaning that the bank took it in foreclosure probably this past month. I just click, if you go here to click on the property appraiser website here, back down, who's the owner? Okay, and we have an interior picture from 2016.
They just foreclosed on this thing.
They just foreclosed on it in December.
Here's the nice thing about doing the spreadsheet, Marta. Marta says she does the spreadsheet. Now it's on record, right? So this thing will continue to cycle through the auction 3-4 times. 3 months later, it's still sitting here. They might not drop the list price because they're selling it occupied. They might leave that as is, but they start dropping their reserves. And that reserve starts coming down, and all Lewis and I have to do is look at that spreadsheet and just keep putting in our number, And team, you have no idea how many times I've bought a house that I started bidding on 2-3 months before, because my number is always my number. I wait for the seller to come to me. It's not much different than buying a pullback or selling a pullback, right? It's waiting for that retest. That's sort of what we do. As a matter of fact, we currently have one under contract that we'll review with you guys in a couple of weeks. that I started bidding on back in September. They just accepted my number. So it's a beautiful thing. It does work. Any questions on the spreadsheet? Any questions on what we have done so far here? If not, we can go ahead and bring Kevin on.
All right,
Kevin
type
is on.
1 if you Kevin, type 2 if you have questions.
Fine.
Not even one of them.
I'm going with Kevin, man.
Bring Kevin.
Kevin.
All right. Thanks, guys. Hector, Luis, good afternoon. Appreciate you guys having me on. Can you hear me well?
Sounds
Yes,
great, man. Nice, loud and clear.
Great. Good to know. Good to know. Hope everybody's doing great today on Friday.
Doing fantastic. How are you doing, Kevin? I know you and I talked yesterday, so you were doing great yesterday.
Yeah, I wish I had some Florida weather. It was actually sleeting outside this morning, so I'm tired of the cold weather. I may have to look in South Florida, Hector.
Hey, come on over, man. We got plenty of room.
Where are you right now?
So I'm in Alabama, halfway between Birmingham and Huntsville, in a city called Coleman, Alabama. Probably population of 20,000. So in between two larger cities, it's I guess you would consider it a commuter city between those two.
I was in Birmingham about three months ago or so. Beautiful place around there. I went riding motorcycles over there.
Oh, that's nice. Well, if you come back this way, give me a call.
Absolutely, will do. So talk to us a little bit. How did you get the real estate bug? How did you get into this? Or talk to us a little bit about it. What have you done? Where are you at with it?
So I've been on a journey the last couple of years, like I suspect a lot of people have through the pandemic. I started with real life trading, just absorbing and consuming all of the free content that I could. And then I guess it was about a year ago. It was actually during Free Week. I joined, the paid version, and I've been loving the all access pass. Along the way, gosh, I've just been absorbing, reading everything I could get my hands on. Rich Dad, Poor Dad was one of the first ones that I started with, and Robert Kiyosaki talks about assets. And I'm like, I need some assets. I've got to collect some assets. So started looking at real estate more seriously. Obviously, during this whole time, I've been learning trading as well, along with my full-time W-2 job. And then I guess the aha moment was, and I'll go back to a relative here. My wife's grandfather, he had 10 children. He had a normal W-2 job. And I always wondered how he did so well. 10 kids, paid for all of their college and their education. And then I noticed when he passed, he had a lot of property, from commercial property to farmlands to various single family home rentals. And then it dawned on me that his W-2 job was just his capital to invest in property and real estate. And it just made sense to me that had to be a part of my future, as part of my building of wealth and being able to provide for my family and have a comfortable future.
Love it, man. That's pretty cool. But let me ask you a question. Did you say 10 kids?
Yes. So
you put them all through college. Whew.
He did. Yeah. And no one really explained how he did that. And that's what really got me in it. I finally figured it out. My wife and I, kind of the same day, we looked at each other. We're like, that's how he did it, through real estate.
That's amazing, man. That's the power of real estate. I love that you mentioned Rich Dad Poor Dad. It is actually one of the books that we recommend. We highly recommend everybody read if you haven't read it.
Yeah, absolutely. I think it's a great first place to start, and it will certainly pique your interest and show you what's possible. So
you see your father-in-law build this amazing real estate portfolio and kind of live life on his terms, if you would, because by the sound of it, he kept working his W-2, but he was able to put his entire large family, 10 kids is a large family in my mind, for sure. And he was able to put them all through college, and he was able to do amazing things, which that sounds to me like living life on your own terms. And then so you get the bug, you get the idea, you realize, hey, this is where I want to be. But is there a particular reason why that attracted you to, hey, I want to do something similar to what my father-in-law was able to do? What drives you? What is your reason for wanting to do it and create those assets?
So over the past 2 to 3 years, I've been able to telework a lot from home, and I realized how important your time is. And for me, being able to do things that I want and on the time that I want to do those, and have control of my time, and being able to spend more time with my family and friends, and just enjoy life, knowing that life is always too short. That's really what is driving me to the journey I'm on now, and certainly towards real estate.
So freedom and time, if I'm understanding you correctly. Did we lose Kevin, or did I lose you guys?
Oh, yep. I lost you for a second, Hector. My apologies. Can you hear me?
Yep, there you are.
Yes.
Okay. So
freedom and time with the family is more or less the why that I'm understanding, that I'm gathering from you.
Yeah, absolutely. Just one of the things that I've read is, and it makes perfect sense, is the ability to control your own time is one of the largest things that gives people joy and happiness. And so that's what I'm seeking. And that, and just being able to share the journey with others such that they could see what's possible.
That's awesome, man. That's definitely that's one of the biggest reasons for me as well. One of the biggest reasons why I like to help people get into real estate is that the ability to control their time, that freedom. So talk to us a little bit about your journey. Where are you currently at in your journey? How long have you been? I think you said you've been at it for a couple of years now. Where are you at in terms of building that portfolio?
Yeah, so my journey started a couple of years ago, but to be honest, we just got in some property less than 6 months ago. I got started a little late to get in, when real estate was so fantastic in 2020 and 21. So at this point, we have 2 rentals, 2 single family home properties. One of them is rented, has a tenant in it. The other one, we've just got the deed a few weeks back, and we're going through rehab as we speak.
Nice. That's awesome. So I know you and I talked a little bit about what you're currently doing in terms of rehabs. Tell me what lessons did you learn from that first one? You're currently working on the rehab on the second one, but what did you learn from that first one, and what are you doing differently with the second one?
So the first one, so fortunately there were already tenants in the property. What I learned from the first one is to be creative with financing and terms. Seller financing can be a fantastic thing to pursue. So getting to know the owner of the property, the current landlord, and what their needs and desires are can really go a long way to help you acquire that property. For me, it was an older person, an older lady, and it was to the point in her life where she was not looking to chase rent checks, but she didn't want a windfall of cash where she would have to pay a lot of taxes on that. So seller financing worked great for her. It's working great for us. Now, the one thing I've learned on the first one is we're managing it ourselves. So right off the bat, we had to come up with a lease agreement because the current lease agreement was lost and couldn't be found. So just making sure, having communication, sitting down and talking with the current tenants, going over the new lease agreement. That was a great learning experience. But so far, it's gone really well. For future properties, if at all possible, I will have a property manager. But it's been a great learning experience and given me appreciation for what property managers do on a day-to-day basis.
Yeah, I bet it has. So before we get to the property management side of things, I do want to unpack the seller financing thing, because we often get questions about, hey, I don't have the money. Hey, where do I come up with the cash? And so you did something very cool, very creative, where you basically added value to someone's life who, like you said, number one, she was not in a position to continue to chase the rent checks and deal with all the headaches that might be associated with being a landlord. But she also didn't want the heavy tax burden of selling this property that, you know, if it's an older person, they probably own for quite a while. So they have a substantial amount of equity that they've captured and depreciation that they would have to pay gains on that after all these years. So by selling it and financing it to you, not only is it adding value to you, but it's also adding value to them, because they get that continued cash flow that they need in their retirement and their older age. You get to come into the property with little or no money out of pocket, and you don't ever need to go see a lender or a bank and have to go through all the stress of getting a loan. Even if you look great on paper, it's still a hassle, and you can typically get better terms, especially in this type of rate environment, from a seller. Maybe in 2020, when rates were 3%, seller financing didn't make sense, but as I've been saying for the last few months, it is coming back. And Kevin found a way to help someone and help himself all at the same time, creating a win-win situation. So that's amazing. And I know you said you inherited the tenants that were there. You had to deal with some issues with the property management, and now you are going on hiring a property manager for your next one that you're currently on the rehab on. Am I correct?
That's correct.
Tell me a little bit about what criteria you're using to find that property manager and what you learned from that search and talking to those property managers.
Yeah, so I basically went word of mouth and looked for references for property managers. I found one that I really liked, and he came out to the property and spent an hour with me just going through the property. And he gave me advice on everything as far as what he recommends, as far as leverage, as far as debt, how much is too much, how much is the sweet spot, helping me find that there were hardwood floors under the carpet that could be refinished. So, you know, we're talking about cost of rehab earlier on the spreadsheet. So that was a win. And obviously hardwood floors look really great in a home. Yep. And buyers and renters enjoy that. He went through the house and showed me things that, you know, if I was going to rent, repair, if I was going to sell, replace. The outside of the house, we went over with a fine-tooth comb, and just the knowledge and the time that he spent with me going through the property is really what sold me on this individual.
Wow. That's amazing. I mean, I think just on the floors alone, he probably just covered at least half of the first year's commission. Am I right or am I wrong?
Yeah, that was a sweet find.
Yeah, I can only imagine. So team, I say it time and time again, property managers, especially ones like this, right? And that's what you want. If you got a property manager that's giving you the runaround, you might want to keep searching. But Kevin hit basically a pot of gold when he found someone that was willing to take that much time and that education. I can only imagine that was helpful for you, not just from, I mean, even as far as the loan to value, that's so awesome. But being able to have that local knowledge about the property and tell you, hey, look, try to rip up this carpet, find the flooring. That's invaluable. I'm pretty sure that also helped you with your rehab. I think if I remember correctly, you said that you're doing some of this rehab yourself on this one. That's
correct. So we're doing a lot of the rehab ourselves. Fortunately, it's mostly paint and flooring, a lot of the CapEx items, roof, windows, siding has been replaced within the last 5 years. So that's a win as far as looking at future expenses and repairs. So yeah, that's very helpful from a perspective of doing a lot of this ourselves. That's awesome. Yeah, because I'm sure if you go for a contractor, maybe the contractor would have been able to share some of these tips and some of this general rehab stuff. But the nice thing about getting it from a property manager, they have no
they have no, what is it, bone in the fight? I forget what it's called, but they're not gonna make a profit. You know, where the GC, you might look at them like, why is this guy telling me this? Where the property managers, they're just giving you value. They're just adding value to your life and earning your business. No bone to pick. There you go. Thank you, Emily. I'm sorry. I knew it was something I wanted to say along those lines. There was a bone involved. And so did you get a chance to speak with other property managers, or Kevin, or did you just happen to hit a lucky one on the first one that you spoke to?
So I was very lucky, and this individual was the first one that I've spoken to. I do know other property managers. In fact, one of them is an acquaintance, a friend. But after talking with this individual, I mean, he sold me on just his knowledge and experience, that he knows what he's doing, and just taking the time shows to me that he's willing to put forth that effort and to help out. And it was just a win. It'll be a win-win for both of us, in my opinion.
That's cool. I love it. I definitely, I think that'll be a good one for you for sure. It doesn't, sometimes we're tempted to hire a friends and family team, but you got to go with what's best, especially in your business when you're just getting started. This is Kevin's second rental, technically. And so he wants to make sure it goes as smooth as possible. So he went with the person that added the most value to the business, and that makes sense. Kevin, here's a hard question. Was their fee scary? Did it make you want to not hire them? And if you want to share the fee, go ahead.
Yeah, so it was higher than I anticipated, and higher than what I've heard you and Luis discuss. So their fee is 15%. The good side of that is they only collect fee when there's a tenant, when they collect the rent check from the tenant. So that's the win there. There's no cost for finding the best tenant or going through applicants. It's all covered in the 15% fee. And to be honest, I could save 2 or 3% going with another individual. But to me, when you're talking about a rental property dealing with tenants, for peace of mind, I'm happy to pay that extra 2 or 3% for this individual who just has the knowledge and experience.
I love it. And let me ask you, because you said that also covers your new tenants, so they're not going to charge a commission when the tenant moves in, when they find your new tenant?
That's correct. So it's 15% of the gross rent, and they only collect when there's a tenant in here paying, obviously, and there's no initial charge or fee for getting the tenants into the property. That's
pretty interesting, and that's definitely a savings. In my experience, most property managers will charge some sort of a fee for listing the property and for bringing in and screening the tenant at the beginning. Some do a full month, some do a half a month, but that alone sounds like, by the time you add it all up, it's probably about a wash. Then you're probably paying a much lower commission if you take that aspect out of it, and then now you had to pay that commission, let's say every 2 years when you have a tenant turn.
Oh, good. That makes me feel better already, Hector.
Yeah, for sure. That's you and I didn't talk about that last time, but yeah, that's definitely a good one. That's not a bad thing. The idea is not to have a lot of tenant turnover. Obviously, that costs you money and pain and cleanup and that kind of stuff, but it happens. It's a factor of being a landlord. The better screening that's done at the beginning, the easier it is to get a longer term tenant, but it doesn't always happen. Sometimes you think, oh, this is a perfect family that's going to live in my 3-bedroom house for the next 5 years, and they last a year and they go because life changes for them. And so that can add up if you have to pay a commission each time you have a turn, for sure.
One thing that I wanted to say, that I like that that is structured, because now both interests are aligned. Both him and the property manager make money at the same time. So he's not getting hit with fees here, fees there, fees everywhere, which is what we are used to seeing in Florida, pretty much. Every time they move a hand, they charge a fee. In this case, even though the percentage is higher, he only getting money when Kevin is getting money. I like that a lot.
Yeah, That's definitely a good one. And I mean, it's like you said, sometimes it's painful with some property managers. You got to screen them. So Kevin, you got very lucky by finding a really good one relatively early in the game. One of the reasons why I had to open a property management company was because it was a struggle back in 2015, 2014 to find good property managers. There was just so much going on in the market. But what's been your biggest takeaway so far, Kevin? From real estate investing all up until now?
So one thing I noticed is, and I expect that you and Luis would agree with this, when doing a rehab, it's always going to take longer than you think it's going to take. It may be a day longer, it may be a week longer, it may be a month longer. But in my opinion, in my mind, things move so much faster than they actually do physically when it comes to the rehab. So just be prepared for that. Hope for the best and plan for the worst. And don't let that stress get to you, because it does take time to do a rehab, and it's better to do it the right way as opposed to doing it quickly and having to make those repairs when tenants are in here, because then they're a whole another set of challenges when the tenants are living in here. And the other thing that I've seen is as part of this real estate investing is it takes a team to be successful. As far as it pays to have a great attorney, a real estate attorney, good property managers, and a CPA that can answer questions for you and help you do things the right way to ensure you get the best tax benefits and don't put yourself into a bad situation. So those three people or groups of people are critical to success in real estate.
So I love it. Real estate is a team sport for sure. I do agree with that. And in terms of timelines, I can't disagree there. It happens, right? Sometimes it's a week over, sometimes it's 6 months over. It
happens.
As much as we try to plan, especially with the way that things are with materials. So the last 2 or 3 projects that Luis and I have done, it's not really sometimes even the contractors that are behind schedule. It's our deliveries from materials from Home Depot. We just had one a delivery. I made the entire order in one shot. Big old 2-pallet order. It got delivered in like 3 or 4 pieces in little chunks at a time. That was not at all what I was going for. I was going for a big old order, just drop it all in the garage. My guys have the access to stuff. It was just ridiculous. And let's not talk about appliances. If you're ordering appliances, Kevin, order them ahead of time, man, because they are slow to come in these days.
Yeah, thanks for the warning.
Yes, I actually just went through that in December. Ordered a set of appliances from Home Depot early in December. They gave me a scheduled date of right around like December 10th or something like that. My appliances actually got delivered on the 28th of December or the 26th, something like that. Like almost, it was after Christmas. I can tell you that much. All right, Kevin, what's next for you, man? I know that you mentioned some plans. What share with the team what's next for Kevin? You've learned some really good, valuable experiences. You've set up a nice. You're starting to build a really nice team. It sounds like you're getting very comfortable with many aspects of real estate and trying to build out your portfolio. What's next for you?
So just around the corner, we'll start with short-term goals. Once I finish the rehab on this property, I'm looking to get into multifamily, whether it's a duplex, triplex, quadplex, something that has multiple doors. I have already in mind a property. It's one parcel that has a duplex and a single family home in it in the city limits. Good location. It's been sitting vacant for a year. I know who owns it. It's an older gentleman. So that's my next thing that I'm looking at, finding a way to make that property to acquire that property. So that's my next goal.
Nice.
Down the road, and maybe I could get some help underwriting that in the future, right?
Absolutely, man.
There we go. So, but my long-term plan right now, I think I mentioned, I still have a W-2 job. I'm teleworking for a large extent of that, which is fantastic. And as long as I can continue to do that, I'm fairly comfortable. But my 5-year plan is to be able to move away from a W-2 job, do real estate investing full time, or as much time as I want to spend on it, and have more freedom, be controlling my own time, help others as much as I can, and share what I've learned, and spend time with family and friends.
Nice. I love it. So over the course of the next 5 years, Kevin will be building his real estate empire and then retiring on a yacht. Is that what I heard?
Yeah, sure. I'll put that on my 5-year plan, Hector. It's
There you
not
go.
quite that, but something close.
There you go. Hey, maybe you get a jet instead of a yacht. Different people, different strokes, right?
There we go.
But I do love that, Kevin. Thank you so much for sharing the time. Obviously, you know how to get a hold of us. I'm absolutely willing, able, and I want to help you on the right duplex and anything else that you've come across. For the time being, man, what can we do this week, next week to add value to your business?
To me, for my business?
Yes, sir. To you, your business, your real estate portfolio, and your life. I just appreciate you so much, man, and the fact that you are sharing your time and your story with us. What can I do for you?
I would love to talk to you about this next property I have in mind, and how we can look to underwrite that and maybe come up with some creative financing to make that happen in the near future. That'd be fantastic.
Easy, man. Let's I'll shoot you a message on Slack shortly here, and let's come up with a time to next week to get on a call. That's
fantastic. I just want to thank Hector, thank you and Luis both for having me on, and for all of those on Slack. If I'm still early in my journey, but if there's anything I can do to help you answer your questions, I'll be happy to. And I would say that the first deal is the most important, because once you get that first successful deal, the second one is easier and the third one's easier, and it just builds from there.
I love it. That's such a fact. You build that confidence, and you go through all the headache, but you realize, hey, it's doable. I'm still here.
I got one quick last question for Kevin. Now that you've been in a couple of years, couple of deals, couple of properties, has real estate been as scary to you as everybody makes it to be, or not?
I'll be honest with you. It's much less scary to me than taking a day trade. So I struggle more. I know that may be funny, and I know a lot of people are great at day trading. And one day I hope I'm there. But for my personality, it's not scary. It's a real asset that I can put my hands on. So from my perspective, my personality, it's much easier to me than trading. And it's not a scary thing at all, right? When you have experts that can help you and you have a team to reach out to, it should not be scary. It's a great investment area to get into.
I love that answer.
Love it, man. That's the best answer I ever could have had somebody give. That's beautiful, man. Thank you so much, Kevin. I really appreciate your time and you sharing the story, because a lot of times it's just me and Luis, have been doing it for a long time. And I love that Luis asked that question, because to some people it can be scary, especially when you're starting off and they see me and Luis like, oh, well, they've been doing it for a long time. Where here's Kevin. He hasn't been at it for an enormous amount of time, and he is finding success, and he's just checking all the boxes and little by little going at it. Kevin, thank you so much for sharing your story. We really appreciate you being on today.
Absolutely. Thank you guys for the opportunity. I hope everyone has a great weekend. Thanks, man. Have a good weekend.
Thank you so much for being here.
Yates, the man, is here. But before we give you the stage, Yates, I do want to mention Cindy's comments. Cindy mentioned Toby Mathis on YouTube, and I have heard of him and I have watched some of his stuff. He's a really he's a CPA, I believe, or a tax attorney, and so he has really good content in terms of marrying real estate and saving taxes and stuff like that. So if anybody wants to check him out, Toby Mathis, it's definitely really good education in terms of an attorney and CPA, she says. Exactly. So a really good tax strategy kind of guy. And guess what he says? Two investments that you just cannot afford to be out of. Two investment classes: real estate and the stock market. So team, you're in the right place at the right time, always. Thank you so much for joining us. We really do appreciate you checking out the Real Life Real Estate Show. If you are watching us on YouTube, make sure you hit like and subscribe. And if you're here live, thank you so much for sticking around. We know it's Friday afternoon. We appreciate you, team. Love you guys. Have a fantastic afternoon.
Thank you, guys. Another quick thing, just before Jay jump in. I'm not sure if you noticed, today is not the last Friday of the month. We changing our schedule. We're gonna be live on the second Friday of the month, and then on the last Friday of the month. So we're putting more material for you guys. We're bringing the real estate show twice. So if you got any questions, you got any comments, if there's anything you guys want to know, please hit us on Slack. If not, come to reallifetrading.com/RE. You got it over here. And or email realestate@reallifetrading.com. Hit us there, hit us on Slack, whatever. We're always on the other side of the screen, and we're here for you. Thank you, and see you in 2 weeks.